Welcome back to Mid-Cap Radar. Hormaz just a while ago highlighted about how exactly BSE today was surging in the session, seeing a very strong up move. The stock, Bombay Stock Exchange, that's listed. Along with that, if you also have a look at MCX, Multi-Commodity Exchange, that stock too is doing very well in the session today. So exchanges today are doing quite well. IEX is largely flat. But as promised, we have the management of Pokarna. Remember, the stock has surged more than 120% in 2024 so far. It has reported a decent set of Q1 FY21 earnings. For FY25, the management expects revenue growth of 15 to 25% and margins is expected to be maintained at 30 to 35%. To discuss this and more, we are joined by Paras Kumar Jain, CEO of the company, who joins us now. Good afternoon, Mr. Jain. Thank you so much for joining us. First up, like you mentioned, could you reiterate your targets as far as FY25 is concerned? Could you break it up for us in terms of the two divisions? And also, when do you expect profitability to revive? We understand that the US business currently is undergoing a bit of pressure.
Thank you for having me on the show today. So coming to your question, like Quartz business, as I told on your previous show also, we expect 30 to 35% growth coming in. So we expect largely the growth coming in the bottom line. And also we expect a close matching growth coming on the top line as well. Granite business, which is another part of our company, we don't expect a larger growth. We expect the division to be muted. But we think that overall the consolidated would make up for whatever we are losing in the Granite part. Because we believe that the Quartz business is poised for good growth in FY25.
Okay, so Mr. Jain, will the decline in Granite be as much as you saw in Q1? It was a 64% decline that you saw. Are you seeing any sort of improvement in that particular segment?
We are not seeing much improvement in Granite, so I don't think that the numbers would be better than what you saw in the last quarter. But overall, the business sentiment on the Granite side has been very muted. But we believe that on the Quartz side of it, the things are pretty strong. So we think that will make up on the Quartz side.
Mr. Jain, in a recent analyst meet, you've actually highlighted two products, two systems. The first system is the Kreos system and the other system is the Chromia system. And you've also highlighted by the end of this month, you're expecting them to come on stream. Number one, can you tell us, what is the kind of capex you've incurred, to roll out these two new systems? Along with that, what is the visibility as far as the revenues are concerned and when does the revenue actually kick in?
Okay. Kreos system is expected to be commercialized in Q3 of FY25, which is the next quarter. And Chromia system is expected to be commercialized in Q4 of FY25. So let me give you a little background on Kreos and Chromia. So Kreos is basically a new system of distribution of material which helps us to produce more exotic designs than compared to the existing distribution system what we have. And Chromia system is for making high digital printing on the slab. So both these technologies are expected to be ready by the end of this year because in Kreos, after the commercialization, there's going to be some R&D phase as well. So we don't expect a larger revenues to start rolling out from these two in this financial year. We expect mostly the contributions to come in the next financial year. So we are expecting some incremental net value realization on this product. So I don't have the right numbers yet because the R&D is still in progress.
But is there a ballpark? I know if you can't give us the exact figure, some number that you have in mind that you'll be able to achieve next year. This year, as you said, you won't be able to get the full benefit. But in FY26, what kind of numbers are you looking at from these two systems?
So we expect that Kreos would give you a 10 to 15% incremental realization on the product side of it. Chromia is more of a digital printing, so we will have to see how because Chromia has also got to do with this producing thinner slab, which is again a different market. So Chromia would help, both Kreos and Chromia would help us to also get into a new product segment. So there the realizations are completely not yet anticipated. So it will take some time to give me some color on the Chromia side, but on Kreos, between 10 to 15%, we are expecting the realizations to improve on those product sides.
Okay. Mr. Jain, let's talk about EBITDA margins. You're expecting it to sustain in the range of 30 to 35%. And also, you did mention that shipping and freight expenses continue to remain quite elevated. As of Q2, what is the kind of impact you're seeing from shipping as well as freight rates? Has there been any delays because of the supply chain situation? And do you expect Q2 to see an impact on margins because of these above-mentioned developments?
See, the freight expenses continues to be challenging because of the situation both with the Red Sea and the container allotment, primarily coming because of the increased demand in China, which is taking most of the containers, and then there are shortage in the other market. So there has been delays in terms of recognizing some revenues because the materials are at ICD and we are not able to recognize those revenues in the last quarter. Situation has improved a little bit, but not completely because the freight rate continued to be high. And the customers sometimes try to push out the deliveries because they think that the freight may come down in the next month or so. But overall, the situation on the freight side is continuing to be challenging as it was on Q1. And overall, we think that even on the import side, because we have a bit of imports also coming in for raw materials coming from different parts of the world, predominantly Europe. So we are also ending up paying a little more than what we usually pay on the freight side. I should say not little more, but much more. But overall, because we have the ability to pass on the freight on the export side, so we are able to pass on that to the customers. So we expect that the EBITDA margins will not be impacted. And in fact, with the product mix and the new designs what we have developed in the recent past, we expect the EBITDA margins to be better than what we are currently assuming in 30 to 35% range.
Mr. Jain, can you give us a sense of how much higher are those import costs? What percentage of your total raw materials are being imported? And in the export market, are customers delaying their decisions? If yes, how much of sales are getting impacted because of that, specifically in the US, because you'd spoken about some demand concerns there earlier?
Yeah. So basically, see, if we were paying $500 for a container from Europe in the past, now we are paying over $2,000 and sometimes $3,000 also. So that's the amount of difference what is happening on the freight side of it. On the export side of it, we don't have most of our customers delaying, but there are very few customers who are delaying the deliveries. And I think we've been able to maneuver that also. So I don't see major challenges on the delivery side at this time.
Mr. Jain, one last quick question. Any update on the sale of the apparel business? Q1, you said you're looking to divest that business.
Yeah, so we have not yet got any offer which is to the management's acceptance. So we are continuing to look at that business to scale it down as much as possible. So in fact, since it's a discontinuing operation, there are hardly any expenses out there. So we have brought to a level where we don't really incur a huge amount of cost every month.
Okay. All right, Mr. Jain, thank you so much for joining in today with all those details and the outlook on the business going forward and what's happening with the export markets as well. That's Pokarna Limited. The stock is up 120% this year, though today we are seeing some red on the stock. Let's slip into a short break. When we come back, we'll get you more on the markets and we'll focus on Lumax Autotech in our mid-cap spotlight segment. Stay tuned for that.